Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing PayPal stock so we can determine if it's a buy or a sell. PayPal is a service that allows people to electronically pay and receive money. You simply link your bank account, credit card, or debit card to your PayPal account, then make purchases or receive money. Most countries in the world use PayPal. They make money by charging a fee per transaction. The company does not charge a monthly fee and there is no minimum balance required. It also does not charge for inactivity or limited use. The company owns Venmo, Braintree, Honey, and many more brands. They did try to acquire Pinterest, but that deal fell through. One of its co-founders is Peter Thiel. The original name of the company was Confinity, and they started out developing security software for handheld devices. It really had no success with that business model, so they switched their focus to a digital wallet, and that was the first version of PayPal. In 2000, it merged with X.com, an online financial services company founded in 1999 by Elon Musk. Elon was replaced by Peter Thiel as CEO of X.com, and eventually X.com was renamed PayPal in 2001, and they went public in 2002. It then became a wholly owned subsidiary of eBay at a purchase price of $1.5 billion. In 2015, eBay spun off PayPal into an independent company. The company is headquartered in San Jose, California, and was founded in 1998. Let's get started with the model. This is a large cap company, 72 billion market cap. They're trading at $63 a share, and they have 1.1 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow is pretty consistent each year, around $5 billion. Net income is a profit or loss on the income statement. It's revenue minus expenses. And that was $4 billion in 2020 and 2021. Dropping to around $2.5 billion in 2022 and $2.7 billion in the trailing 12 months. Revenue is the sales for the company, and that goes up each year from $21.5 billion to $28 billion in the trailing 12 months. Here's their most recent income statement, the first quarter of 2023 versus the first quarter of 2022. Revenue of $7 billion, up from $6.5 billion. Let me give you a breakdown of the $7 billion so you know what it is. Of the $7 billion of revenue, $4 billion in the US, $3 billion outside the US. Most of their revenue is from transaction fees, $6.4 billion, $700 million from value-added services. Here's a breakdown of those two categories. Most of the transaction revenues are fees charged to merchants and consumers on the various transactions that go through its platform. They also pick up some revenue from currency conversions, cross-border transactions. They may charge an additional fee when people are transacting between different countries. If you want to pull your money instantly from PayPal or Venmo, you might have to pay an extra fee. I never withdraw money instantly from Venmo. I picked a free option. I think it's between 1 and 3 business days you'll get the money. They also charge fees to facilitate the purchase and sales of cryptocurrencies, and then other miscellaneous fees. You might be wondering what value-added services are. This is revenue earned through partnerships, referral fees, subscriptions, gateway fees, and other services. I know they have a portfolio of loans where they loan money to small and medium-sized businesses, and those businesses pay interest on those loans. So that's part of value-added services. Let's go back to their income statement. Here are their expenses. Transaction expense, $3.3 billion. Transaction losses, $440 million, because they guarantee the money goes through successfully. So if somebody doesn't pay on their product and they make a claim with PayPal, PayPal fronts the money and tries to get it from the sending party. And sometimes they don't get the money. That's happened to me before when I bought products through like eBay. Of course, there's customer support. When you call up PayPal and you speak to somebody, they have to pay those people a salary. That's $488 million. Sales and marketing, $436 million. That's down a lot from last year of $600 million. Technology and development, $720 million. General and admin, $500 million. Operating expenses of $6 billion, up from $5.8 billion. So their operating income is $1 billion. They had a $75 million gain on other. Income taxes of $279 million, so their net income is $800 million, better than last year's quarter of $500 million. Their EPS is 70 cents, up from 44 cents. They had 1.16 billion shares outstanding last year. They have 34 million less shares this year, so it looks like they're buying back stock. It's 1.13 billion. Let's look at their statement of cash flows. The statement of cash flows has three sections: operating, investing, and financing. Operating cash flow converts net income, which was $795 million, into cash. So they actually generated $1.2 billion in their operational business because they have to add back the non-cash items on the income statement. Credit losses of $440 million, depreciation of $270 million, and stock-based compensation of $345 million. And there's other smaller adjustments, but they go the other way. These are cash outflows. Last year they had lower net income, $500 million, but more cash flow. Let's look at the investing and financing sections on the statement of cash flows. Remember earlier I said they loan money to small and medium-sized businesses? It looks like they loaned $8.3 billion, and they received $8.1 billion on those loans. They spent $6.1 billion on investments. These are probably short-term liquid investments like treasury bonds. $5.4 billion of investments matured. They had a cash inflow of $1.1 billion from funds receivable. Funds receivables is more of a timing thing. Sometimes it could take multiple days to transfer money between accounts. So PayPal may front the money, then receive the money a day or two later. So in their investing section, they had a cash inflow of $34 million. Last year was a cash outflow of $750 million. In their financing section is where they buy back stock. They bought back $1.4 billion of common stock. Last year was $1.5 billion. When a company buys back its own stock, it carries it on the balance sheet as treasury stock. That's a contra equity account. That brings down your equity balance. They had a cash outflow of $1 billion. These are funds payable due to customers. I think this is more of a timing thing between transactions of PayPal accounts or Venmo. So in their financing section, they had a cash outflow of $2.7 billion. Last year was a cash outflow of $669 million. Let's go through their first quarter presentation slides. A strong start to the year with revenue and EPS outperforming. Total payment volume, that's how much money is transacted on their platform, $355 billion. And that's up 10% from the first quarter of 2022. Net revenue of $7 billion, up 9%. Operating income of $1 billion, up 41%. EPS of 70 cents compared to 43 cents. We saw that earlier on the income statement. GAAP refers to the numbers on their income statement. When you see non-GAAP, that means they strip things out like stock-based compensation, so it doesn't exactly match their income statement. Operating cash flow of $1.2 billion, free cash flow of $1 billion. So this implies they had $200 million of investments in property, plant, and equipment. And it looks like they had $170 million of purchases of property and equipment. So that makes sense. Because free cash flow is operating cash flow, which is $1.17 billion, minus investments in PP&E. Ironically, it's exactly $1 billion. That's just a really big coincidence. And they raised their 2023 guidance. We'll go through a slide later on in this video that breaks down their 2023 guidance with actual numbers. I think it's easier to look at that slide than this blurb down here. PayPal had a very good start to 2023 and delivered stronger than expected performance in the first quarter. We're working hard to continually improve our already popular checkout and digital wallet experiences. We are confident in raising our full year EPS guidance as a result. Revenues of $7 billion, that's up 9%. I prefer to look at GAAP numbers, not non-GAAP. Operating income of $1 billion, up 41%. EPS of 70 cents, up 61%. A lot of the slides are just reviews of other slides, so there might be some repeat information. Total payment volume, $355 billion, up 10% from Q1 2022. If you take into account foreign exchange rates, it's up 12%. I prefer to look at spot prices. Net revenue, $7 billion, up 9%. EPS of 70 cents, up 61%. Cash flow, $1.2 billion, down 4%. Remember earlier in the statement of cash flows, in the operating cash flow section, I showed you they generated more operating cash flow last year, the first quarter of 2022, versus the first quarter of 2023. And free cash flow is also down year over year, down 3%. But when you round them, they're both 1 billion. Their TPV is 355 billion total payment volume. That's for the first quarter of 2023. Even though they're saying it's up 10%, that's comparing to the first quarter of 2022. It is down from last quarter. Although last quarter is Christmas, so that's why it's their biggest quarter, the fourth quarter. Same thing last year. It went from 340 billion in the fourth quarter of 2021 to 323 billion in the first quarter of 2022. But they grew 23% in the fourth quarter of 2021 compared to the fourth quarter of 2020. And then only 13%, 9%, 9%, then 5%, which is terrible, and 10%, which is down from 13%. So that's why the stock isn't doing as well as it should, because their growth is stabilizing. Even though they are growing, they're growing less. And when a company grows less, investors assume it's going to keep growing less and less, then eventually have negative growth, where it's going down 1 or 2% a year, or possibly more. They have 433 million active accounts. That's up 1% year over year. But this is the TPA, transactions per account. And that is going up. 53 transactions per account in this quarter compared to 47 last year. TPA is strong at 13. But if their active accounts start to decline, which it looks like it may start to happen, then the transactions per account have to grow dramatically just to keep up. And that's pretty unlikely to happen. For the full year 2022, they had 435 million accounts. Total payment volume 1.36 trillion. Net revenue 27.5 billion. EPS of 413 and free cash flow of 5.1 billion. And this is their 5-year CAGR. CAGR is compound annual growth rate. And for active accounts, it's 14%, TPV 24%, net revenue 16%, EPS 17%, and free cash flow 22%. So the growth is there, but it's starting to slow down. It may sound like a lot of accounts, 435 million, and a lot of money to be transacted, 1.36 trillion, but it's tiny next to Alipay. A few years ago, PayPal used to transact almost all the transactions on eBay. Their eBay business has declined a lot. So for comparison purposes, assume it was like 10 years ago, PayPal is to eBay as Alipay is to Alibaba. Because Alipay does a lot of the transactions for Alibaba. That's why it's such a huge company. In US dollars, they transact $17 trillion a year, and that was in 2020, so it's probably higher now. PayPal is 1.36 trillion, they're 17 trillion. PayPal has 435 million active accounts, they have 1.3 billion. And why is it so much bigger? Because China is a huge country. Another reason Alipay does so much business, because Alibaba's website has a lot of companies, some really big companies. I know PayPal is trying to grow that part of the business. Most of PayPal and Venmo are individuals, so there's not as much money transacted per account. But PayPal has Braintree, and Braintree delivers best-in-class enterprise-grade processing for merchants who need sophistication and customization. They also offer PayPal Complete Payments, PPCP. PPCP is an end-to-end full-stack payments platform serving small to mid-sized businesses and partners. Here's their guidance for 2023, raising non-GAAP EPS to reflect strong first quarter performance with ongoing benefit from cost initiatives. They expect free cash flow of 2023 of 5 billion. That's what I have in my model, 5 billion for 2023. Non-GAAP EPS of $5. They expect to spend $4 billion in share repurchases. When a company buys back its own common stock, that decreases the shares outstanding, which makes your shares more valuable. Capital expenditures is 3% of revenue. Balance sheet and liquidity. Strong balance sheet and cash flow generation. Continued commitment to capital return. Cash and investments of 15 billion as of March 31st. Debt of 10.9 billion. Cash flow from operations of 1.2 billion. Free cash flow of 1 billion. Cash flow from operations and free cash flow impacted by higher cash taxes compared to first quarter of 2022. Operational cash flow in the trailing 12 months, 5.8 billion. Free cash flow of 5.1 billion. In the first quarter, they repurchased 19 million shares of common stock. returning $1.4 billion to stockholders. In the trailing 12 months, they repurchased 48 million shares, returning $4.1 billion to you. Let's look at the capital structure. $20 billion of equity, $10.5 billion of debt. They're 65% equity, 35% debt. And they could pay off all the debt with the cash on their balance sheet and still have $166 million of cash left over. I'm surprised they didn't mention that in one of the slides, that their net debt is negative. That's a pretty big selling point. I gave them a WACC of 8.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $102 billion. We discounted those numbers back to today's and weighted average cost of capital. We get a value of the company of $94 billion. We divide that by 1.1 billion shares. And we get a calculated stock price of $82. They're trading at $63, so they're trading at a 23% discount. It's a buy according to the model. Even though their free cash flow is pretty much around $5 billion each year, I'm assuming they're going to start to grow a lot more in 2024, mainly through Venmo. If they don't grow and they start to detract, like they've been doing lately, then obviously my valuation will be a lot lower. Simply Wall Street is at $91. They say the stock is 31% undervalued. 27 analysts priced this stock and the average price target is 97, the low is 70, the high is 160. That's crazy. Somebody valued at 160. What are they smoking? Another 40 analysts priced this stock and the average price target is 98. They say the stock is 56% undervalued. This is where the stock has been trading since they were spun off from eBay in 2015. It looks like the stock pretty much traded sideways for the first 2 years. It finally broke through $50 in the beginning of 2017. And then at the beginning of 2019, it hit $100. Right before COVID, it was $120. Then $80 was the COVID bottom. Then it blew up past $300. But now the stock is down 80% from the top. It is trading higher than its IPO price, but it's trading so much lower than 2021 levels. It seems like a good value at this point, but I don't know if I would buy it. I don't see the future in this company, and I use Venmo all the time, and I've been using PayPal since I had eBay since 2001. But I think competition is just too fierce for this company, unless they make some really good acquisitions. This is the most recent event on their website. It was about a week ago. They're introducing Venmo Teen Account. This is where parents can set up Venmo accounts for their 13 to 17-year-olds. And it also comes with a debit card. For the first time, the Venmo Teen Account gives teenagers a way to engage with and learn more about managing money through the Venmo app. The Venmo Teen Account will allow parents to monitor transactions, manage privacy settings, send money to their teen, and will help parents to educate their teens on creating healthy money habits. That sounds reasonable to me. There are 52 companies in the same industry as PayPal, and if PayPal has a number in red, they're worse than the median. If they have a number in blue, they're better than the median. They spend $680 million in CapEx, which is higher than the average and median. They have a good debt to equity ratio. For each dollar of equity, they have 50 cents of debt, a lot better than the average and median. They do not pay a dividend, but most companies here do. Look at Lufax, 10.8% yield. OneMain, 10% yield. They generate lots of free cash flow, over $5 billion, but a lot less than the top 3, and also a lot less than number 5, Capital One Financial. They rank 4th in market cap, pretty far behind Visa and MasterCard, a bit behind American Express. Their price to book is worse than the average and the median. Price to book is market cap over book value. Their PE is worse than the average and median. PE is market cap over earnings. Their price to free cash flow is better than the average, but a lot worse than the median. That's market cap over free cash flow. Their price to sales is better than the average, worse than the median. That's market cap over revenue. They generate a little less revenue than Visa, a good amount more than MasterCard, but a lot less than American Express. But they're still growing. Their 5-year annual revenue growth rate is 15%. That is higher than the top 3. To summarize, I have them trading at a 23% discount. They've been around 25 years. They do have a really good brand name, and I do love Venmo. I probably would not buy this stock, but I wouldn't be surprised if it did get back up to where it was before. I also wouldn't be surprised if it kept languishing. I'm kind of midway between this stock. I don't hate it, I don't love it, but there's a lot more stocks that I like better. I rank their free cash flow as 5 out of 10, their revenue 6 out of 10, and their ratio is 4 to 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.